Morning everyone, thank you for tuning in once again to Rational Thinking. My name's Nathan, I'm one of the corporate dealers here at Rational Foreign Exchange, and I'm here to talk to you a little bit about what happened last week and what factors are going to drive the currency markets in the week ahead. So last week was another struggle for the pound as war was waged in Westminster, as there were two sides, those who are happy to leave the EU without a deal and those who believe it's economic suicide to do so. The battle continues, and there's still a lot of uncertainty as to how things are going to pan out regarding the two sides that are trying to push for a no deal or secure a deal with the UK or with the EU. May was asked by European ministers to look at softening her red line stance regarding some of the policies. They feel that it's taken too long to move forward with the negotiations and that the UK risk crashing out of the EU without a deal being done, and that could be really, really detrimental for the pound, and that's why we're seeing it so low and could have wider implications for the UK economy. Carney took a shot at the EU last week, explaining that there are significant risks posed to financial stability, and that if the EU don't go along with the UK, where the UK are happy to have EU contracts enforced in the UK and to accept these contracts, that if the EU don't reciprocate, it could cause significant risks to the derivatives market across the EU and the UK. The derivatives market accounts for is worth roughly £96 billion, and these derivative contracts are used to hedge financial risks and are really significant to the functioning of financial markets, not only in the UK but also in the EU. So Carney's really pushing that they come to some sort of agreement and essentially adopt the contracts that are in place. The UK's spending committee also released figures or estimates that they essentially feel that or believe that the Brexit bill is going to be close to £10 billion higher than initially anticipated. And they feel that any windfalls as a result of leaving the EU could be sometime down the track. This is obviously created further negative sentiment around the pound last week. Across in Europe on Friday, there was a slight reprieve for the euro as the European Council were able to secure a deal regarding migrants. This relieves a lot of pressure for Angela Merkel and her position, and this created a bit of stability and a bit of a boost to the euro, which was much needed as the migrant crisis is a big issue and is causing a lot of uncertainty over in Europe. Okay, so this week we have a lot of manufacturing data from the UK, US and Europe. That's all out today, and a lot of the talk around the figures will be how these trade wars are having an impact on manufacturing. With Trump and him implementing a lot of these trade tariffs, there is talk that this will see a contraction in manufacturing across the board, which will then potentially cause a contraction across the globe. So global economies, share markets, the currency markets are all eagerly anticipating what impact or what figures are going to come out in terms of manufacturing. Most notably on Friday, Trump is set to enforce roughly $36 billion worth of tariffs on roughly $36 billion worth of goods on China. That has had or is expected to have a knock-on effect, with Harley-Davidson already indicating that they are looking to pull manufacturing out of the US to avoid the European import tariffs, as their bikes become more expensive. So there is a bit of a trade-off with that. On Thursday, we will see the minutes of the Fed's last meeting. So I'll give a bit more insight as to their logic and their thoughts regarding interest rate expectations. So if there's anything big in those meeting minutes, we could see the dollar move a little bit off the back of that. Friday is also seeing Non Farm Payroll figures in the US come out. That's a big indicator in terms of what those figures are going to be and how that's going to potentially drive interest rates in the US moving forward. Obviously a positive figure will push expectations higher of an interest rate hike and move the dollar higher. Obviously a slightly more negative figure will reduce those expectations. We could see the dollar drop off slightly. With the economy, the US economy at close to full employment, it's still expected that it will still be a strong figure. As I mentioned earlier, the Brexit negotiations and talk continue. Theresa May's had a lot of infighting with her cabinet, and she has a big get-together with them at her private retreat on Friday, where she will essentially try to negotiate a deal between the two parties who are looking for no deal or a deal. And over the weekend, as those talks develop, there could be significant movement in the pound as we get some more clarity one way or another as to what the UK stance is going to be and what her cabinet has agreed on. Thank you once again for tuning in to Rational Thinking. If you have any questions or queries or would like to speak to us, drop us an email or give us a call.